Hey traders, Jonathan with Control the Trade here, and we're going to take a look at a bunch of different stocks that are pretty much falling apart right now, that were the huge hot stocks that were melting up for so long, and now they're coming back to earth. You can see that I had the XBI up before because all the biotechs are just falling apart, and then you have Uber right here. Look at the Uber chart. I mean, so I've had this line here. Look at the breakout area. Looks like I have a buy order in here around my line of 45. You can see this breakup candle high here hit 45.38, and then we're coming into the 50 period moving average here. 46.75 is where we're at right now, and 44.67 is the 50-day moving average, which is almost coincides with this important number here at 45. So I have some alerts set here. Definitely suggest that. This is a really ugly candle to have on the daily chart. Or excuse me, this is a weekly chart actually. That is a really ugly weekly chart. Candle right there. Looks like this turned out to be a reversal candle here, and we could just be checking back in down here. There's nothing really wrong with this chart. It just took off so fast and furious that it's still bullish right now. So it's kind of interesting. The close here was 44.87. So do we have a gap here? And the low is 45.05. Yeah. So you have a convergence of things. We have 45, which is a number that I charted a long time ago that I found important. You have the 50-week moving average down here. I misspoke before. And you also have, let's see what else we have. Let's go to the daily chart. Daily chart, we're coming to the 200 period moving average. I mean, there's a lot going on here where you think there will be support. The 200 period moving average, you would expect a better bounce here. That 46.75 is the 200-day moving average. We're right there right now. So it still looks like it's going to be heading lower. Let's look at the 20-month moving average. That looks a little better from a long-term perspective if you're holding this stock. Just you still need an awareness of all these numbers, though. These dotted lines are important on my charts as former breakout and breakdown areas for Uber. Let's go to the next one. By the way, this is based on a tweet that I had sent out. Let's go to the tweet real quick. Pelaton, CrowdStrike, Uber, Twilio, Exact Sciences, DDOG, NIO, FUBO, and Virgin Galactic, SPCE. So let's go to SPCE because we are coming into a lot of these numbers that have been on the chart for so long, and I never thought, it looked like they're never going to get there, and they seem like crazy numbers, but now they don't seem so crazy anymore. So 2107 was breached. Again, we're looking. This is Virgin Galactic. Let's look at the daily, and we're still free falling here. 1837 is way back here. I think there's a gap also to look for. And look at this. You can see the patterns with this thing. You have the history of this. If we go back a little further, let's see. The weekly chart gives us a nice view. Come from nowhere, squeeze, get crushed back down. Consolidate, come from nowhere, squeeze, get crushed, come back down to earth. We're kind of in that coming back down to earth phase right now, which would probably bring us into this zone, maybe somewhere in the teens, which we guess we are now. We're at 19, but maybe somewhere. Let's see, the close of this candle here, 17 or 16.43. We could come all the way down back to $17, and I would not be surprised. So that's a good area to find a bounce. Would be about $17. Let's see if we can get any more clues from the monthly chart. Monthly chart, we breached the 20-month moving average, which is really bearish. That's really surprising, actually. 20-month. There's not a lot of tape on this one, though. It hasn't been around that long. So it's $20.82. You do not, if you're a holder of this stock, you do not want to end the month of May below that number. You can see we spiked it here in April, and we held. But now we're breaking down, and we have a low here on this candle, I think from November of 17.14. We just talked about 17. So that's going to be your next area of support. And you can see I have some old lines here. 13 was an original breakout area that I talked about probably two years ago now, I guess, as the first breakout area that we were looking for. Right now, if this continues lower, does not hold on the 20-month, then 17 is kind of be our next stop. So let's create an alert. Maybe at 17, 18. Let's do 1760. It came up. Let's do that. All right, let's go to the next one. I remember, let's see what else was on the chart. Crowd. I remember tweeting about CrowdStrike, and saying that we're going to get to 150, 155, 150, 350 on the chart. This is the breakout area here. No reason we can't visit that area again. It's teased a couple of times. Now the question is, will it finally come to meet the 200 period moving average down here, 170? That should be really strong support. So we may not get to this 153.50 unless the whole market starts to fall apart. Then I could see that happening. Maybe we'll hit the 200 period moving average, consolidate down there, and maybe go lower from there. It really depends on the overall health of the market. That's a great area to look for support. That's what the purpose of this video is, to find stocks that have been running extremely hot and are coming back to earth now, and you can find more reasonable entries for either a day trade, swing trade, or if you believe in the company, a long-term buy and hold. So 200 period moving average on CrowdStrike is interesting. Let's look at the weekly. Here we go. This is nice. This is a great area to look for too. We have about 160 here is the 50-week moving average. That's a great place to look for support. And then let's look at the monthly. I think we just had that up a second ago. Monthly has a really nice, if you look at this, is cool because this is the long-term chart. Now you have this reversal candle here. We can definitely call that a reversal candle here now. The low of this candle, 168.67, that's going to be an area that we're going to try to find support and a bounce. I'm going to set an alert there. But what I was saying before is you have a nice bull flag pattern still. The long-term chart on this, on CrowdStrike, is really, really healthy. There's nothing wrong with it. You have this huge candle right here. This is our bull flag pattern here that we have on the monthly chart. So look for long-term support, 153.50 we talked about, all the way down to 138.24, and it's still a healthy chart. You have the 20-month moving average down here at this blue line. Moving on to DDOG, try to make these quick as I can. Again, something else that hasn't been around that long, but we have the 20-month moving average here, 72.41, and we've already breached that. Nice uptrend here, consolidating within this bull flag, but let's look at a different time frame. It's going to be more helpful. And the daily, you can see this is falling off a cliff here, so we have to find support, and guess where that is? It's going to be in this gap right here. Chances are we're going to fill this gap, so be on the lookout for that. I'm going to start setting alerts down here. Let's see, at or below 61, and let's see where it might come back to earth here. That's again what this video is about, hot stocks that squeezed and are coming back to earth. And maybe we look for the next round of squeezes if that's going to happen, if we can get a bounce. You can see I have an important line all the way down at 50. Not saying it's going to get there, but we did close at 55.69, and we gapped up open here at 61.87. So somewhere in that zone, you look for a gap fill here. That should be very strong support. Let's look at a weekly chart, see if we can get some more clues there too. Really ugly weekly chart. You do not want to close below this candle here on the weekly. It's in free fall mode as well. You probably have a lot of retail traders and just bailing out of this thing. Prices getting driven down by the shorts, institutions, and who wants to hold on to something like this? Maybe you're taking profit, maybe they're breaking even at this point. This was a breakout area, so it actually doesn't surprise me that you might get to that point of psychology here where you're getting, there was like this FOMO move here, you get in, you're riding it, and then, oh no, I don't want to lose my original investment, so you get this flush down right here. That's a generalization, but that's usually how the psychology works, and that's why it's important to have these important lines on the chart. Kind of marks the sentiment of a stock, it marks the breakout area of the stock and the breakdown areas of the stock. You can see this is definitely a breakout area right here at 50, and that's why we have the line on the chart. Moving on, let's look at plug. I know there's a lot of people that are excited about this one. Another great example of too fast and too furious, short squeeze, FOMO, speculation, jump on board and then get crushed. I mean, no one would have believed that we'd be down to 25 at this point, but look where we came from. And I've talked about this in another video, so if you haven't seen my plug video, highly recommend watching this. I'm surprised it's down to 22 already, but we do have some moving averages down here for support. But let's look at the daily. Daily's falling apart. 24.59 was our next level of support that we talked about. It bounced around there a little bit, and now we've lost it. That is definitely bearish. You do have what appears to be at a glance a little gap down here in the mid-teens. Let's look at a monthly. Wow, this chart is just crazy. I remember I did a video on this a long time, probably about 9 months ago, and I thought this chart was crazy then. When it was in the 20s, it was crazy, and it went up to 75. So coming back to earth here is a great area of support all the way down. We just talked about this. 17.22. So set your alerts around there, look for a bounce, and you get the 50-month moving average down here. You get the low of this breakup candle here, this strong candle here as support, but again, that's very low. That's a huge range. Maybe you get this A leg up, B leg down, C leg squeeze pattern here, but it's hard to say. I don't really know anything about this company. You guys know I don't look at the fundamentals. If there's any positive news about a company like this, or then I could see that happening. Otherwise, all of this is a short squeeze and capitulation down into either support or continued downtrend back into, let's say, a reality. We had a couple stocks. I have a couple more to look at here, but let's look at a couple requests that we had. NMM. I've never looked at it before, so this could be interesting just to look at it at a glance. Whoa. Okay. This is crazy. I wonder if there was a split or something. This is crazy. 323.40. Maybe there's more to this chart than I know about, so I don't know if I can really look at this. This is an incredibly crazy chart. All the way down to 408. And now we're at 31. Wow. I need to look into this a little more. Right now you have a nice short-term uptrend and a long-term downtrend. So it looks good. Looks like it was saved here by the 20-period moving average. I'm going to come back to this one. It's definitely interesting. BDRY is the next one. BDRY kind of the opposite here. We're heading towards the 20-period moving average. Opened up really poorly. This looks like a possible reversal candle. You make this high on high volume, and then the next day just drop into nowhere land. When you get this far extended from the 20-day moving average, which when I learned to chart is considered home base, stocks will revisit and test that area. So that's what it looks like right now. Nothing too serious. Let's just see how it responds if it does get there. And let's go back and wrap this up on a few other stocks. Next up is NIO. Let me get rid of this short-term Fibonacci chart that I made here. And you can see we are breaching the 200-period moving average again. This happened back here. Got a nice bounce, then got rejected by the 50. This is another one that I've been tweeting about for a while back in the 50s and 60s, saying that I expected it to go down to the 20s, and I still do. Still think this is going to the 20s, believe it or not. And I think we'll get a really nice bounce, though, in that area. There's really good support. There's a gap, I believe. You can see we do have the 50-week moving average here, 32.25. So that should serve as support. Look at the monthly. You have the 20-month down at 21.69. And let's look at the daily. So all the way back here, we had our breakout area way down here at 13. And let's call this another breakout area where we had this gap up. This is what I'm waiting for, this move down here all the way at the low of this candle, which is 23.73. So somewhere between 23 and 25 should find support if and when it starts to break below the 200-day moving average. Shorts will continue to pile on this and try to get their money back from getting destroyed through this entire move here, because this was a short squeeze. And you're probably getting a lot of profit taking as well, because it's just probably very frustrating to be a NIO stock owner right now after you had all this good news and this run. A lot of people are paying attention to that and they think it's going to be the next Tesla. Right now that's just not reality. We're just looking at the charts, and the charts are telling us that this thing is falling apart. It's going down right now. It would need a big move to get saved. We thought maybe that would happen with the earnings. It didn't. Got to get back above the 50-period moving average in order to get a spark. But the purpose of this video, again, we're looking at things that are overcooked and coming back to earth and then finding great support. So for NIO, that great support is going to be down here in the mid-20s, in my opinion. All right, two more quick ones. We have Exact Sciences. The reason I want to show this one is because I get to show this important number that's been on the chart for a long time. That's why it's so thick. I think I made this one extra important, 106. And we came down, found support. Not great support, though, because it's still kind of hanging out. You'd expect a better bounce in this area, but this is our breakout area, former breakdown area if you go back further in the chart. And I played this as a day trade today. Bought it, I think, around 106 exactly. So this one looks like if we hold 106, you should get another bounce up. If we lose 106, we're talking much lower prices. We're going to talk probably getting back to 100 or mid 90s. Twilio is another one that looks like it's falling apart into one of our numbers. Opened up below the 200-day moving average, extremely bearish when you do that. Found support down here at this old Fibonacci. I'm not sure, this Fibonacci line, I'm not even sure if I need to update that. But below that, looks like one of my important numbers is 288. So I'm personally going to wait for a signal to get down, maybe buy down there. Again, something that's overcooked, that is coming back to earth. And 288 seems like a good area of support. Again, former breakdown area got rejected, and our breakout area, you can see we broke out. We've tried to visit that area a couple times. Market saved it. Or we can get saved this time. That's what we're going to have to find out. Pelaton, everyone's favorite. I've been following Pelaton for a very long time, and even called the top on this one way back in a tweet. You can see my line here. This orange dotted line, I believe, was what I was expecting the top to be. I can't believe it actually did top out here, and we've been falling away ever since. Now, I'm expecting, we do have earnings coming out, so I'm expecting something in the low to mid 70s. Like if it spikes down there, that should be support again. We're talking about former breakout areas. This is a breakout area right here. So we're revisiting that right now after all this time. Shorts piling back on after getting destroyed. All this was a short squeeze mixed with, you know, the whole at-home hype about Pelaton. There's no way, I mean, I'm putting my fundamentals hat on. This thing is way overcooked, way overvalued. I mean, it's ridiculous, and it's coming back to earth right now. It needed the help of that terrible news story in order to do so, but it was destined to do this move regardless of that news story. It just accelerated it and gave the market an excuse to flush this down and for the shorts to pile back onto the stock. Let's see what happens at earnings. Maybe you'll get another bounce here in the 70s. We also have an important number here down at 65.30. I think we have one more. FUBO. Look at FUBO, fell apart. Once we lost 22, rejected, and then we've lost 22, we were back down to earth on this one too. What a great example of a short squeeze and something that was not in reality and is way back down. Again, let's look at a longer term chart. Monthly chart. Maybe you're going to find some support down here all the way at, like, let's say between 1350 and 1450, somewhere in that zone will be excellent support. Maybe you'll get another squeeze out of this one. Weekly chart looks very weak as well, no pun intended. 1565, that's where I would want to take a trade, somewhere around a little less than 16 for a day trade, maybe a swing trade. See if we get a reaction down there. That's going to wrap it up for this video. It was a really quick look. I'm going to take a deeper dive into some of these stocks really soon, and thank you for watching. If you haven't subscribed, please subscribe, and remember, don't let the trade control you.